This video is sponsored by the trading brokerage Moomoo. Use my link down below, deposit $100 with Moomoo, and we each get 5 stocks, and each of those stocks, get this guys, is valued up to $3,500. So get your free money from Moomoo, link down below, and let's get right into the video. Are you guys ready for this week? You better be freaking ready. I don't even know if I'm ready. I don't even know if I'm ready for what's going to happen. All you guys know at this point, the stock market's been crashing as of late. The Nasdaq's getting destroyed. The S&P's getting hit pretty hard, but not as bad as the Nasdaq. And this week, we have an FOMC meeting. Tuesday, Wednesday, we have big tech earnings. We have a lot of companies in general reporting earnings, so we have a lot to break down in this video. If you all find value, hit the like button, subscribe. Make sure to join my Patreon if you want all my moves plus more in the stock market. That's linked down below. And with that being said, let's get right into the video. So at this point, you guys know the deal. You know what's been going on. The markets have been crashing, some indexes more than others. I mean, look, the S&P via SPY is down about 9% from the all-time high, so it's not even in correction territory. But on the flip side, Triple Q, which tracks the NASDAQ 100, this is down a lot more. Let me show you guys. This is down about 15% from the recent all-time high, so this is well into correction territory. And we have the Dow. Let's see how the Dow's holding up. As many of you guys, or most of you guys, should know, the Dow is comprised of a lot of safer value plays, right? The Dow is down about, let's see here, guys, it is down about 7%, so that's holding up nicely. And we have the Russell down, which is the small cap index. Let's see here. The Russell's down about 20%, 19.3 to be exact. So this one's on the cusp, on the brinks of a bear market. So a lot of stocks out there are getting hit, and you guys know at this point, right? If we didn't have the big tech names holding up these indexes, things would be a lot worse. I mean, we'd probably be deep into a bear market at this point. I mean, what's the stat? The stats, I think the NASDAQ, like 40% of the NASDAQ stocks are 50%, might be even more now because this was from a couple of weeks ago. All of these stocks, 50% of them, 40% of them are down about 50% from the past year. So a lot of NASDAQ stocks and stocks in general are getting hit very aggressively while the big tech names are holding things up. And like I said, a lot of these big tech names are reporting earnings this week. We have Microsoft, we have Tesla, we have Apple, we have, those are the main ones for this week. Visa, Robinhood. We have companies like Caterpillar, and these aren't all necessarily big tech, but very important companies. General Electric, AT&T, Boeing, Lockheed Martin, Raytheon, Chevron, Phillips 66, Verizon. There's so many companies that are reporting this week. And again, FOMC meeting Tuesday and Wednesday, and this is going to be huge. The meeting itself and these numbers that companies are going to be producing, because we saw what Netflix did. If we go to Netflix, right, and this is the first big tech name to have, reported this quarter, they got destroyed. The stock went down 22% on Friday after missing subscribers. The growth wasn't as great as expected. So is this setting the tone for maybe weak earnings for Apple, maybe for Google, Microsoft, Amazon? I don't know if it is. I mean, I don't know if those companies are going to suffer as well, but it's freaking the markets out that Netflix is dropping 20%. Just imagine, what if Apple, even if Apple fell 5%, what would happen to the markets? Let's say Apple fell 10%. This market is going to get hit. And I don't want to sound like a super doomsdayer in this video. I kind of sound pessimistic, I just realized, but I'm just giving it to you guys how I'm feeling right now and what I believe and how I'm seeing things. The market is being held up by these big tech names. If these names collapse this week, it is over. I mean, no, it's not over. I mean, I don't want to sound like some of these channels that are always perma bears. What's the word? But, it's going to be rough. It's going to be rough. Let's just put it that way. And the Fed, this is going to be huge. Are they going to take a super dovish stance, or are they going to tell the markets what they want to hear? Or, well, I guess that is a dovish stance. Or are they going to be super hawkish, which if that could cause the markets to drop for sure a lot more, and coupled with, let's say these tech names do drop the ball with earnings, and if the Fed takes a hawkish stance, we might be in a bear market next week. I mean, look, guys, this is going to be very huge. It's very uncertain. There's a lot of uncertainty out there, and the truth is, in times like these, you guys got to keep it simple, right? I'm not a financial advisor, but what I'm personally doing is I'm simply still dollar cost averaging into index funds, right, for some long-term plays or for a long-term investment, right? I've been doing that for a while, so I'm buying VOO. That's consistent. I'm holding a good amount of cash. Like I've said, I have about 40 to 50% cash. I've mentioned that in my previous couple of videos. So at this point in time, I'm just playing it safe. I'm just investing a little bit here and there. Dollar cost averaging, I've been doing that, and I'm holding a good amount of cash in my positions that I believe in as of now. I'm not really complicating it. I'm not trying to sell out of everything and time the market. That's not what I'm doing. I'm just riding the wave. I'm riding the roller coaster, and I'm not planning on jumping off. I'll tell you that. I'll keep some dry powder, but I'm not one of these guys that's going to jump out completely and try and time it and get back in lower. That's just not a game that I'm willing to play here, So what do you guys think? Drop me a comment down below. Make sure to hit the like button if you all are finding value in this video. And I feel like I just ranted for about 5-6 minutes straight. Maybe you guys like it. Maybe you don't. I don't know. But now let's talk about these stocks. Number one is Microsoft, MSFT. This is one that just recently it's been slipping. In this month of January alone, the stock is down 14%. And from the all-time high, it's just down 15%. So that goes to show we hit all-time highs back in the end of November, and it's pretty much been stagnant, or was stagnant, end of November throughout the beginning of this year. And then once the calendar year started, once January hit, this thing started selling off. Again, it's down 15%. So Microsoft is well in correction territory. They report earnings this upcoming week on the 25th, which is what? We're not going to mess the dates up in this video, guys. 25th. So what's that? Sunday's the 23rd. 24th is Monday. I guess Tuesday. Tuesday is when Microsoft's reporting. So at this point in time, yes, we're under both moving averages. We're under, this trend line that I drew out last week. We're looking pretty bearish in the very short term, but it's not in free fall mode quite yet. Yes, we are. There's no bottom in sight by the looks of it, but it's not like it's completely collapsing. It's not there yet. And I think if it does start getting under 280, that's where it could start collapsing. But as of now, guys, this trend still looks pretty decent. As long as we're between 285, 295, maybe we break above 300, this could be in play. But like I said, with what happened to Netflix, we have these other big tech names reporting. I'm going to be a bit cautious with stocks like Microsoft, Netflix, obviously, or maybe I was actually considering maybe just picking up a couple Netflix shares to speculate a little bit. Maybe I'm being a bit of a degenerate, guys. I don't know. What do you think? But yeah, these stocks are going to be interesting. So keep your eyes on Microsoft this week. We'll see what it does at around 300, 290. We'll see what it does in that area. We also have none other than Tesla, which reported that record delivery number recently. That was about what? A couple of weeks ago. I don't know. And since then, the stock has been destroyed. This stock went to 1,200. Now it's at 936. It was actually in the mid 1,200s, meaning it is down 25% over the past couple of months. And not to toot my own horn, guys, but I did trim a lot of my Tesla position in general here when it hit about 1230. And I'm not trying to be the guy that's like, oh, I'm timing the market. I just said a couple seconds ago I don't want to do that. But in this case, I sold out, and the timing ended up being good, at least here in the short term, because again, I sold at about 1230. Now we're at 930. So this stock is down about, let's see here, wow, 23% from where I sold it. And at this point, it could be going lower, guys. We have earnings coming up on the 26th. So what is that? Wednesday? I don't know. I'm probably going to butcher these dates. But overall, just know Tesla, Microsoft this week. And at this point, we're under the moving averages. were really clearly free-falling at this point. The stock went down 5% on Friday alone, and it seems like it's on its way, well on its way, to test that mid-December low, which is right around $900. Did it go under 900? It looks like it might have went to about 890. So if this takes out that low, guys, which is, I don't want to say highly likely because nobody freaking knows what's going to happen, but if earnings, let's say they miss the ball on earnings in a couple of days, maybe the markets just continue going down in general, which would drag down Tesla, and we take out that 890 low, that's not going to be good, guys. I'm telling you, this could go 800, high 700s again. Very, very possible. And if it does start getting that deep, that deep in the red, somebody's going to start, people are going to start buying that dip. I don't know if I am necessarily. I might. I'm going to consider it. But I already have Tesla shares at a lower price, so I don't know if I want to. It depends. It really just depends on how, what other stocks are looking like and so forth. So I'm watching Tesla, guys. I'm keeping an eye on the earnings. That's why we're talking about it in this video, and it's one of the top 5 stocks that we're mentioning. Another one here is Intel, which I personally own. I've been buying Intel for a months at this point, multiple months, and my average is probably low mid 50s, pretty much right where we are now, 52, 53 bucks. And they report earnings. Let's see here. They report earnings on the 26th, which I do believe the 26th is Wednesday, same day as Tesla. And you guys can see this one got pretty hot, probably too hot if you're looking at it. It got to about 58.50. That was on the 10th of, what was that, 10th of January, so about 12, 13 days ago. It got pretty hot, and now it's been pulling back aggressively. The stock is down about 10% over the past couple of days alone, and I think now it's getting to the point where it's looking like a dip buy. It's right by the 180 moving average on the 4-hour chart. We're right by the trend line that I just drew. The stock's oversold. We have earnings coming up. So I personally think that Intel is one of those stocks that, obviously, it's a value play. We're seeing a rotation out of growth. I think more money is going to come into Intel, quite honestly, and I could be wrong, but I do think more money is coming into Intel. So I think this dip's going to be bought up, especially if earnings are good. I wouldn't be surprised if they crush earnings, this stock rips maybe 5-10% after market hours. Very possible. Or even just in the following days after earnings. So keep your eyes on Intel. It's a value play, low P, nice dividend. That's what investors are flocking to right now. So Intel fits that profile of investors, or whatever the heck you want to call it. Apple, AAPL, is another giant reporting this week, which I mentioned in this video. If Apple falls 5-10 more percent, let's say it gets into a bear market, the markets are going to get destroyed in the short term. I mean, that's just reality. You have to understand that, guys, and keep it close in your mind this week. Watch these big tech names and watch how the overall market reacts to them. You'll see how much of an influence that they really do have at the end of the day. So Apple's reporting, let's see here, on the 27th. So what's that? On Thursday. I feel like Apple always reports on a Thursday, and this stock is down about 12%. It's in correction territory. It's well under the moving averages. We're noticing a death cross. And let's see here. If I draw a trend line, what are we looking like here on Apple? Based on this basic trend line that I just drew, which could be a bunch of BS, but we're going to go with it in this video, maybe Apple does come down a little bit more, maybe 150, 155. But this is one of those stocks, honestly, guys, when I'm looking at just stocks out there in general, I would definitely be a buyer of Apple if it did get down about 15-20% from all-time highs. If this got down to a reasonable price, and by that I mean maybe like 135, 140, maybe it does come down a bit more. Let's say it's down 20-25% from all-time highs. I will be buying there. Heck, even if it goes 150, I'll probably buy some shares. Why not? I probably will. So Apple is one that I'm looking at this week. Very excited about it. Another one I'm looking at is Visa, ticker symbol V. They report earnings on, let's see here, the 27th, so that's Thursday, same day as Apple. And this is one that I was hopeful for. I was looking at this. I have my alert at 220. I saw the inverse head and shoulders. I was like, okay, good. This is going to end up breaking out at 220. The right shoulder is going to complete, and we're going to get to 235, 240. We're going to make some money, right? But no, that didn't happen. It doesn't always happen that way, guys. You guys can see now we're breaking the neckline of this right shoulder, or just the overall inverse head and shoulders here. We're under the moving averages, and just on Friday alone, this stock went down about 4%. So at this point, we might be going back under 200 on Visa heading into earnings, maybe going back down to 190. So a lot of these charts, you'll notice, guys, Apple's chart's all right, Intel's chart is pretty good, but a lot of these charts look like dog crap. Visa's probably going to go lower. Robinhood, don't even get me started on freaking Robinhood, guys. This stock's $12 a share now. It went down 5% on Friday, and this stock was $85. I mean, come on, guys. This is insane. This stock went from 34 to 85 once it IPO'd, and I knew at that point. I was probably saying it in the videos, I forget, but I knew the stock wasn't worth $85, $80, even $50, even $30. I mean, now we're getting closer to probably what is at least near fair value, but then again, I'm not going to invest in Robinhood. I don't really like the company. I feel like a lot of businesses out there are doing what Robinhood's doing. I mean, sure, they have a great user interface. They have a nice platform. It's easy to trade options on Robinhood, but come on, I'd much rather just use Fidelity, TD Ameritrade, heck, M1 Finance, Moomoo, which, by the way, Moomoo, you get 5 stocks free, link down below with a $100 deposit. You like that plug? Get your money. I'd rather use companies like that as opposed to Robinhood, which has completely screwed people over in the past, and no, we did not forget about that, guys. But overall, look, the stock's down a bunch. They report earnings. Maybe the earnings report is decent. Maybe we get a short-term spike in the stock. We start breaking out of the moving averages, which, by the way, we're not showing any signs of a breakout quite yet. But who knows? If we do start seeing that, we might be able to trade a momentum play there. But in terms of investing, I've mentioned this before. I'll say it again. I'm never investing in Robinhood. There's no way. Unless they gave me shares for free. In that case, hey, I'm just going to sell them on the open market. So, yeah, guys, that's Robinhood. McDonald's also reports this week. This stock has been getting hit recently, but overall, over the past couple of months, it's been doing well. But in the past couple of days, it's down about 7%. You guys can see we're right by this trend line here, which I did draw out, I believe, in one of my recent videos. So if we do get a nice bounce on McDonald's around maybe 250 at or around maybe 255, 260, we might be able to get a nice play on this with earnings coming up. Let's see here. Earnings are on Thursday, the 27th, so keep your eyes on MCD. We also have MasterCard this week, ticker symbol MA. And like I said, a lot of companies, guys, are reporting, and this week is going to be huge. I'm very excited. Earnings, Fed meeting, Jerome Powell, Q&A, dodging questions, all that good stuff. We're getting it this week, guys. So MasterCard is, let's see here, they're reporting on the 27th. This stock on Friday went down 2.5%, and it looks like it's holding above the 180 SMA by a thread at this point. And one thing that is good, I guess, recently, we did take the high out. If you guys take a look here, the high point from the middle of November was about 372. Bulls did take that out recently. Earlier this year, we hit about 382, 383. So that showed, that was a good sign of strength from the Bulls. But now, again, like I said, we're hovering above that 180 SMA on this 4-hour chart. We're sitting at 350. If this starts breaking under, heading into earnings, maybe even after earnings, then bears are going to get back in charge, and it's going to go lower. It's going to go lower in the short term, probably. Another one that I'm looking at, which did have a crazy run over the past couple of weeks, well, I guess prior to this past week, it ran up a lot. And now it's coming back down to earth a bit. It is seeing some profit taking, a bit of a sell-off. Is Caterpillar, ticker symbol CAT. This stock, just from the end of December, went from 192 to about 230. So So it ran up 20% in just a matter of 2-3 weeks. And just in the past couple of days, it's given back about 8% of that gain. Remember, stocks, what's the saying? Stocks take the stairs up and then they take the elevator down. Or some of them, like some of these SPACs, they take the stairs up and then they just jump out of the freaking building on the way down and crash and burn, right? Because that's what we've been seeing with a lot of these stocks. So Caterpillar this week, they report on the 28th, so that's on Friday, I believe, and I think this could be a nice play. Like Intel, it's sold off. The value plays have sold off a bit recently, like every other stock for the most part, and these could be picked up because I don't think the rotation out of growth into value, I don't think it's over. So yeah, we're going to see Caterpillar, maybe buyer stepping in around 208, 210, 212. That's what I'm looking at for this week. And J&J is another one. J&J is another value play, even though if we're looking at the PE, I think J&J is a little bit overvalued. It's still one that I'm looking at. They report earnings on Monday, maybe. Actually, no, that's on Tuesday. They report earnings on Tuesday, and they're hovering right around the 180 SMA. At this point, they're just a hair under the 180 SMA on this 4-hour chart. So maybe we get a rebound over, let's say, 166. I'll put my alert there right now. If we get out of there, this might see some upside, maybe back up 170, 175. Maybe that's where we could be going. So keep your eyes on these stocks, guys. Again, this week is going to be massive. We have Microsoft, Tesla, Intel, Apple, Visa, Robinhood, McDonald's, MasterCard, Caterpillar, J&J, IBM, GE, Tesla, or actually not Tesla, AT&T. Well, we do have Tesla as well, but I already mentioned them. And we have Boeing, 3M, Lockheed Martin. Oh, wait, there's more. Yes, there's more. We have Raytheon, we have CVX, we have Phillips 66, we have Verizon, and the list goes on. So are you ready? Are you ready? That's just the question that I have today to leave you guys off with. Are you ready for the Fed, for all these earnings? I for sure am ready. I'm excited about this. I think it's going to be a fun week. So if you all found value in this video, make sure to hit the like button, subscribe, drop me a comment, let me know your thoughts, and make sure to join my Patreon if you want all my buy, sells, call outs, morning update videos, more access to me throughout the day. Literally everything I'm doing, from options to long-term investments to trades, everything I'm doing is posted on Patreon. That's linked down below. Or you guys can go to StockSurfest.com/Patreon. Make sure to also get your 5 stocks free from Moomoo. All you have to do is use my link, deposit $100 with them, and we each get 5 stocks valued up to $3,500 each. You heard that right. Get your free money. That's linked down below. I'll catch you guys in the next video. Thanks for watching as always. Keep crushing the markets. Stay safe out there. Peace out, guys.